Ever wonder what the Forex market holds for us this week? Well, you're not alone. Each week, the Forex market has a new tale to tell, a puzzle to solve. It's a vast, dynamic world where understanding market trends can be the key to unlocking potential profits. Just like the weather, predicting these trends is vital for any Forex trader. So if you're intrigued by the idea of deciphering the Forex forecast, you're in the right place. Stick around as we delve into this week's Forex market forecast. Forex market forecasts, a trader's crystal ball. To navigate the ever-changing sea of the foreign exchange market, traders rely on forecasts. But what exactly are these Forex market forecasts? In simplest terms, they are predictions of future currency exchange rates. They provide traders a roadmap to make informed decisions, managing risks, and maximizing profits. Forecasts are not pulled out of thin air. They are the result of careful analysis and consideration of several factors. One of the most common methods used to create forecasts is technical analysis. This involves studying past market data, primarily price and volume, to predict future trends. It's like looking in the rearview mirror to predict the road ahead. Traders use various charts and technical indicators like moving averages, trend lines, and Fibonacci levels to identify patterns and trends. But Forex markets don't exist in a vacuum. They are influenced by real-world events and economic indicators. These are the pulse of a country's economy. They include data such as interest rates, inflation rates, employment numbers, and gross domestic product, GDP. A positive economic indicator usually strengthens a country's currency, while a negative one weakens it. Traders keep a keen eye on these indicators as they can cause significant market movements. Now let's not forget global events. Political instability, natural disasters, and pandemics can cause sudden and dramatic shifts in currency values. These events are harder to predict but can have a significant impact on the Forex market. Traders must stay informed about world events and understand their potential impact on currency prices. In essence, Forex market forecasts are educated guesses. They are not 1% accurate, and there is always a level of risk involved. But when done correctly, they can be incredibly valuable tools in a trader's arsenal. So, Forex market forecasts are a mix of art and science, combining technical analysis, economic indicators, and global events to predict future currency trends. They are the compass guiding traders through the complex world of Forex trading. But before we move on to delve into some key currencies, don't forget to subscribe to our channel and share this video with your fellow traders. Now, let's dive into the US dollar forecast. Starting with the world's reserve currency, the US dollar. As we delve into the forecast for the US dollar, it's crucial to keep in mind the various factors that can influence its performance. First off, let's consider the Federal Reserve's monetary policy. The Fed's decisions on interest rates play a significant role in dictating the dollar's strength. If the Fed decides to raise interest rates, the dollar usually strengthens as higher interest rates attract investors looking for a higher return on their investments. On the other hand, if the Fed lowers interest rates, the dollar could weaken as investors may seek higher returns elsewhere. Moving on to gross domestic product or GDP growth, another key determinant of the dollar's health. A strong GDP growth rate signals a thriving economy, which is likely to boost the dollar's value. Conversely, a sluggish GDP growth rate can undermine the dollar's strength. Then we have inflation rates. Generally, a moderate level of inflation is seen as a sign of a healthy economy, which can bolster the dollar. However, if inflation rates skyrocket and the economy overheats, this could lead to a drop in the dollar's value as the purchasing power of the currency decreases. Looking at these factors, we can see that the US dollar's forecast is a balancing act of these elements. The Federal Reserve's monetary policy, GDP growth, and inflation rates all play their part in determining the dollar's performance. Investors and traders alike need to keep a keen eye on these indicators to make informed decisions about the US dollar. It's worth noting that while we've discussed some of the main factors impacting the dollar, there are myriad other considerations, including geopolitical events, market sentiment, and international trade dynamics that can also sway the dollar's trajectory. In conclusion, the forecast for the US dollar is not set in stone. It's a fluid situation, subject to the ever-changing economic landscape and a host of domestic and international influences. That's the forecast for the US dollar. Next, we turn our attention to the euro. Moving across the Atlantic, we find ourselves examining the European Union's euro. The euro, standing as a significant player in the world's major currencies, leaves a substantial footprint on the global forex market. Today, we'll navigate through some of the critical factors shaping its performance. Let's leap into the European Central Bank's monetary policy. The ECB, like every central bank, leverages monetary policy to regulate money supply, often targeting inflation or interest rates to ensure stability and growth. Any ripples or whispers of changes in this policy can instigate considerable shifts in the euro's value. Picture it as a game of chess, each move precisely planned to maintain equilibrium. Subsequently, we examine the economic growth in the European Union. The euro's strength is intimately linked to the economic vitality of its member countries. Positive growth indicators, such as a booming GDP or decreased unemployment rates, can fortify the euro. On the flip side, any indicators of an economic slump can diminish its strength. Imagine a dance between raw data and sentiment, where each move impacts the euro's performance tempo. Ultimately, we can't overlook the role of political events. The European Union, with its intricate political makeup, can experience considerable ripple effects with any changes in its landscape. Elections, policy changes, even shifts in public sentiment can cause currency fluctuations. It's akin to a boat navigating the sea. Calm waters symbolize stability, but an unexpected storm can stir waves and rock the boat. Studying the euro, therefore, offers a fascinating look into how varied elements converge and shape a currency's value. It's a precarious balancing act where economic, monetary, and political components intertwine in a dynamic, ever-evolving scenario. Remember though, forex trading possesses a high level of risk, and staying informed and prepared is crucial. Leverage this information wisely and keep your adaptability switch on to keep up with the market's rhythm. That wraps up our overview of the euro. Before we voyage to the land of the rising sun, remember to subscribe to our channel and share this video. Your support means a lot to us. Now, let's unravel the forecast for the Japanese yen. Scene script. From Europe, we head to Asia with the Japanese yen. The land of the rising sun is where we find ourselves now, focusing on the performance of the yen, one of the most influential currencies in the world. The yen's performance is closely tied to several factors that we should scrutinize to make an informed forecast. First, let's consider the Bank of Japan's monetary policy. Like its counterparts around the globe, the Bank of Japan plays a pivotal role in shaping the direction of the yen. The bank's decisions to either tighten or loosen its monetary policy can cause significant shifts in the value of the yen. For instance, should the bank decide to decrease interest rates, it would likely lead to a devaluation of the yen as investors seek higher returns elsewhere. Moving on, we must also consider the economic growth in Japan. The overall health of Japan's economy directly impacts the strength of the yen. Strong economic indicators such as robust industrial production and low unemployment rates tend to bolster the yen. Conversely, signs of economic stagnation or contraction can lead to a depreciation of the yen. Hence, keeping a keen eye on Japan's economic indicators is crucial in forecasting the yen's trajectory. Lastly, the influence of geopolitical events cannot be overstated. Japan's geopolitical situation, both domestically and internationally, can cause significant volatility in the yen. Political stability within Japan and its relations with other nations, particularly major trading partners like the United States and China, can sway the yen in one direction or another. Any major conflicts or disruptions in these relationships can cause investors to react, resulting in fluctuations in the yen's value. In conclusion, Forecasting the Japanese yen requires a comprehensive understanding of the Bank of Japan's monetary policy, the state of Japan's economy, and the current geopolitical landscape. By keeping these factors in mind, you can better anticipate the ebb and flow of the yen in the forex market. That wraps up the forecast for the yen. Let's summarize what we've covered. Before we wrap up, let's remember that these forecasts, while not 100% accurate, provide us with a potential look at future market behavior. We've taken a brief journey today through the future prospects of various currencies. The US dollar, a key player as the world's primary reserve currency, is anticipated to keep its robustness. Its course is shaped by elements like the Federal Reserve's monetary policy, economic signals, and the global geopolitical landscape. We then looked at the euro, the second most traded currency. With ongoing political and economic shifts within the European Union, its future remains somewhat uncertain. However, the performance of the Eurozone economies and the European Central Bank's decisions will continue to play a vital role in shaping the euro's path. The Japanese yen, often a refuge in times of market upheaval, may undergo intriguing changes. Its future will rest on Japan's economic health, central bank strategies, and worldwide risk sentiment. Now, these are only forecasts, offering us a guide to potential future developments. But remember, the forex market is always shifting and can be dramatically affected by economic events, political happenings, and unexpected incidents. It's vital to stay updated with economic calendars, keep an eye on the news, and never stop enriching your knowledge. The more you understand, the better equipped you'll be to tackle the market's challenges. That wraps up this week's Forex Market Forecast. But before we go, if you found video helpful, please subscribe and share it with your fellow traders. Remember, the market is volatile and forecasts are not set in stone. Stay informed, stay prepared, and happy trading.